I pulled is all of our folks who are JWB clients who have at least attended one Not Your Average Investor show or the summit. And that's the data that I'm putting on the screen for you all here today. So we have 352 of our clients that are our Not Your Average Investors, meaning you all have attended at least one show or the summit that we did annually. Just you all who are investing the time to be here have earned over $108 million. $108 million.
That's incredible.
The average profits earned per Not Your Average Investor is over $309,000, and your average annual rate of return is 22%. That's 22% each and every year you hold these investment properties. So this is the financial impact that we are enjoying together as a community, and I want to say thank you for spending your time here, and I want you to know that's really important. The amount that we've been able to earn together here, I want to put this up against any other asset that has been invested in since 2011 is how far our numbers go back.
Yeah.
I don't think there's going to be a whole lot of average profits per client, annual rates of return that can compare with what we have done as a community here.
It's a heck of a scoreboard, man. $108 million. That's crazy.
It
man.
pays.
Yeah, it pays to be a Not Your Average Investor. This is what we mean when we talk about in the summit, when we talk about, in the chat, when we promote this like live experience, the value of the room, right? Like how we always talk about the value of this show is the community, is to be surrounded by people like this. Well, how about $108 million of value? Basically 109.
Yeah.
Not too shabby. Not too shabby. What else, GC? What else you got in stats here?
So some other really good stats. Let's go to the next slide here. We have, in our community here, we have two of our Not Your Average Investors have earned over $2 million just from this investment.
Jesus.
Right? We have another 15 folks just from you all here that are on the show have earned between $1 to $2 million just from their investments with JWB. We have 44 folks that have earned between $500,000 and $1 million. And we have 186 Not Your Average Investors just in this community that have earned between $100,000 to $500,000.
I'm one.
You're one.
I'm one.
Absolutely, buddy.
Yeah. That's pretty awesome. Another great little milestone here. 186 of us have made between 100 to 500K in profit. 44 have made half to $1 million since the show started. In the last, well, not since the show started, but by coming to the show, having come to the show, investing in these properties, part of our community, are earning this much, 1 to 2 million, 15 and 2+ million people.
There you go.
I'm looking forward for that 2 million plus to continue to go up.
And here's how you've done it. It's the same message that we have shared on the show for the last 4 years. We have to look beyond just cash flows. Well, here is how your Not Your Average Investor portfolio has performed, and it's a whole lot more than the cash flows or just the net rental income. So if we look at home price appreciation, almost $84 million in home price appreciation from knowing the right market to invest in and making sure you invest with the right team so that you can enjoy all 5 of these profit centers. We've had over $8 million in principal pay down that has been enjoyed by our clients, by our Not Your Average Investors. We have almost $2 million in tax savings that our clients have enjoyed. And, not to discount net rental income because we do need it to pay for itself every single month and then some. So there is positive cash flow to the tune of almost $14 million of net rental income, positive cash flow. So that's how we get to that roughly $109 million that you all are enjoying.
CharityGram has a question. What did the two do to position themselves to be able to get to that 2 million plus? Do you know?
Yeah, they are absolutely listening to our team when we lay out a plan, either on these calls or our plan that our client or our team builds for our clients afterwards. They're absolutely listening. They're engaged with our organization so that we can help craft the right portfolio for them. We've talked a lot about why pulling demand forward is important. So what that means is if you have a plan in place that you need to acquire a certain number of properties, a certain number of assets, well, based on the market conditions at that moment, we're going to reach out to you and say, listen, this is the time for you to pull that forward. And so a lot, those clients, I know one of them specifically comes to my mind right now. Instead of saying they were going to acquire their 10 rental properties over the next 10 years, they did it that year, or they did it over a 1 to 2 to 3 year period of time. And that's why they're sitting here now as one of those $2 million Not Your Average Investors. just from the community.
So we were answering Charity Graham's question about how people have, the folks that have amassed over 2 million. You were saying that these are folks that have stuck to when you get on a call with JWB and you start to plan this portfolio, you set out a plan forward. And then the folks that have done particularly well have been the ones that have listened to the message, pulled forward demand when they were supposed to stuck to the plan, but also had the flexibility in mind of pulling forward demand and going in when opportunity strikes?
The plan was to pull forward demand for those clients. And so sticking to that plan, I mean, that's the difference between a novice rental property investor who many times just flames out and doesn't get to enjoy this versus working with a team of experts and having a plan and coming together and understanding what the end point is and the resources that we have. And we say, okay, cool, collectively, this is what we should do based on market conditions. And so that client that I'm thinking of specifically, which is one of the two, it was a question of like, okay, well, this is where I know I want to go. Instead of getting to 10 properties over the next 10 years, let's repurpose some of that money that's in different assets right now, and then let's put that towards our rental property portfolio and acquire those 10 assets this year or next year.
Yep.
And then you can backfill the other assets that was important to be a part of their portfolio.
Sounds like a familiar story. Okay. So somebody said, as we were rattling off these different profit centers, I think it was Denny in the chat goes, look at that Pac-Man. What he didn't know is that there is a Pac-Man. Look at that Pac-Man.
Mm-hmm.
We talk about the pie chart of the profit centers and it being a Pac-Man. This idea that home price appreciation always ends up being the Pac-Man. All these other profit centers end up being the mouth of the Pac-Man. When we look at this extraordinary wealth that our community has created and we lay it out across the 5 profit centers, no surprise. Home price appreciation is 77% of the pie, which makes the Pac-Man. Net rental income makes up 13%. Tax savings make up 2%. Principal pay down make up 8%, a.k.a. the mouth of the Pac-Man.
There you go. We show this over and over and over again, but most investors out there simply don't get this concept. You have to open up your eyes beyond just cash flow. You need to choose a team and a market that helps deliver across all 5 profit centers. And if you're only paying attention to cash flow, you're missing the big picture. You're missing the big part of the Pac-Man here, because 60 to 80% of your overall returns on investment over a full market cycle will come from home price appreciation.
So, Greg, to summarize, before we move on any further, because our ticker has really gone up here in attendees, in the 400 shows that we have done, the folks that have tuned in over the last 4 years with us over these 400 shows have been 352 folks have bought properties that have attended this show. There has been profits of almost $109 million. Average profit earned per Not Your Average Investor is $309,000. Average annual rate of return, 22%. That is, to me, a perfect illustration of knowledge is power and proximity is power, right? This idea that you can have all the knowledge, but when you're surrounded with the right folks in the right room, you're able to capitalize on these things and, enjoy these kinds of returns. And it doesn't have to stop, man. The good times don't have to stop rolling.
There you go. So a lot of questions that we get about what type of inventory is available today. What's that portfolio look like that JWB prepares for our clients today? So here's what you can invest in today. Minimum investment somewhere around $75,000 to $100,000. Your estimated return on investment is somewhere between 9 to 10%, depending on your portfolio. And I should point out, what was the average return for
22%?
22%.
That's never been on a property eval, if I'm mistaken.
Exactly. Historically, based on market conditions, somewhere around 10% is what we have put on all of our evaluations over time, by the way. Yeah. So one of our core values is under promise and over deliver. And we just think it's so cool when we have an above average return estimated out there, but we still give ourselves some room to wow you, to under promise and over deliver. And that's the way it's been through our company history. And that's the way it'll be for all of you who have yet to become Not Your Average Investor JWB clients, should you decide to invest with us.
hop out into water's fine. You know what I mean?
go.
All right. So that being said, that is the impact measured of our community. I give you all credit. I give myself a little bit of credit for jumping in as well. But we've all made a whole bunch of money. The folks that have tuned into this show have built a whole bunch of wealth, have had a whole bunch of life-changing things happen because we're listening to this advice, because we are not your average investors. Most people that we talk to either don't have the knowledge, don't have the gumption, or just have too many people around them telling them that this isn't the right move to make. We have made the right moves, created this amount of wealth, and have built it together, which I think is really, really cool.